Hi, I'm Andrew Bermer from NMP, and we are here at the New England Mortgage Expo at Mohegan Sun. With me today, I've got Norman Roos, who is the Senior Counsel for Robinson+Cole, also the Counsel to the Connecticut Mortgage Bankers. Norman, thank you for joining us.
Glad to be here, Andrew.
So listen, you just came out of your session, and in your session, you guys talked a lot about disruptions in the mortgage industry. One of the things I want to talk to you about that I feel is going to be a big disruptor, maybe a big opportunity, is going to be focusing on blockchain. Talk to us a little bit about blockchain in the mortgage business.
Well, I think we've talked about this disruption largely due to the advent of fully electronic closings.
Yeah.
The most likely application for blockchain, or the one that comes immediately to mind, is recording. Today in the United States, we have over 3,000 recording offices. In my home state of Connecticut, my little tiny home state, we have 169 recording offices,
wow.
One in each town. Some of those recording offices may be located over a butcher shop in a small town like Collinsville. So recording is performed in some respects the way it has been for centuries, 300 years ago, literally in Connecticut. I've seen documents that were dated in the 1600s, and they're of record just like they are now, and they're recorded the same way.
No.
So we do have electronic recording to some degree, but blockchain, there was an experiment, I believe it was in Illinois, using blockchain to streamline, simplify, and enhance the recording system. So not only would it be simpler to record documents, but there would be greater ability to search and identify information on those records. Now, blockchain has, as I understand it, two components. One is it's accessible through public and private keys using asymmetric cryptography. The other side of it is it's got a distributed ledger. There is no trusted central authority that runs the blockchain. Now, the experiment in Illinois was somewhat successful. They decided they'd like the public-private key infrastructure, but not the central not the distributed ledger so much. They wanted to have more of a central authority.
Yeah, but it's a bit like blockchain. So I've always assumed, that public blockchain. That's what the core of it is. Like it's to have actually a distributed network.
Well, that was the most revolutionary and significant aspect of blockchain.
Yeah.
But in theory, that worked really well, but in practice, the distributed ledger required huge expenditures of energy. There are pictures I've seen of trailers in eastern Washington state where electricity is abundant, and the miners who are figuring out the formulas that allow them to build the blockchain locate because the cost of mining was so great.
Yeah. But they get paid through through the cryptocurrencies that they're
that's
mining.
Right.
Yeah.
And Bitcoin, which was the first most prominent cryptocurrency, had a cap on its limit, and the number of miners was also capped. And also Bitcoin, as you just read in the press, it's gone way up, way down. It's it's not universal. One of the more interesting developments in terms of blockchain and cryptocurrency now is that, and again, this goes to the recording county example, governments are starting to thinking of issuing their own digital currencies. And so China is
governments like
China.
Yeah.
Or as our president would say, China.
Sure.
China is working on this, and actually the first major country to develop a cryptocurrency is going to be able to have some advantage. So I think the U.S. will also be looking at this. But it's a blockchain with a central authority, not a completely distributed ledger, as I understand it.
Interesting. Wow. So listen, I want to jump subjects here. Something that's very specific to Connecticut, which we're here today. Talk to us a little bit about. I believe it's the 1988. Talk to us a little bit about that.
Yes. when we were talking about electronic closings in our session this morning, I also we also discussed Public Act 19-88, an act concerning real estate closings. This was a law passed in the last session of the Connecticut legislature. And what it does is it specifically requires attorneys licensed in Connecticut to be involved in real estate closings. Sort of an interesting concept because attorneys have been involved in real estate closings in Connecticut forever.
Yeah.
But this was I think, a law that anticipated the advent of electronic closings and is intended to preserve the role of attorneys in the closing as in light of the potential disruption that electronic closings poses. And so it's a very short law, 2-paragraph law. It was so short, it was also somewhat unclear. So the real property section of the Connecticut Bar Association has recently published, I think it's a 28-page white paper explaining certain concepts in terms of what is a real estate closing, what does it mean to conduct a real estate closing, because only attorneys can conduct real estate closing. Yeah. It's interesting because it's a piece of legislation that's sort of a throwback and in some respects turns back the clock 30 years or so in that it now requires attorneys to be involved in closings where they traditionally had not been involved, such as home equity loans. Home equity lines, interestingly enough, were specifically exempted from the law, as were loans where no title and certain types of loans where no title insurance is required.
Right. So now I'm going to ask you, so you stated actually the facts, but do you feel actually that attorneys should be involved? Like, what is your personal opinion?
Yeah, well, I wear two hats here.
I know. Let's put on the pressure for you.
I've worked with the mortgage industry for over 40 years. I've been a lawyer equally long, for longer than that. I think that attorneys have a role in closings. I think that the role in terms of advising clients, providing guidance, is important, and that should not be overlooked.
Okay.
I think the more ministerial aspects of the closing don't necessarily require the involvement of a lawyer, and I think ultimately it should be the consumer's choice as to who they hire and for what reasons they hire their lawyer. I think this law, isn't necessarily totally consistent with that. I think the law may be, re-examined. I think the role of attorneys should continue to play a pivotal role in closings, but I don't think it's necessarily something that had to be, legislated.
Yeah, fantastic. Norm, thank you so much for stopping by. Really appreciate it.
My pleasure.
All right. And I'm Andrew Berman from NMP. Thank you for watching.